Let's get into something different now and moving into the advisory with a focus on managing investment and volatility before and after retirement. Pedro Marin Ramirez from Marin Wealth joining me now. Always really difficult to get this balance right, Pedro. What's your thoughts?
Yeah, look, this type of risk that we're seeing at the moment, or I guess a lot of clients that are knocking on our doors, reaching out, and how can we manage volatility, especially in that last 10 years pre-retirement. The biggest risk we're seeing, or I guess we call it, is called sequence risk, which is basically drawing on your retirement investments at the worst time possible. That can have quite a bit of detriment into the future or the longevity of your portfolio. So ideally, we try to manage this risk either in retirement as well, because obviously it can happen. You just retire, and then 5 years in, there could be either a global financial crisis or a massive downturn. Ideally, we use what we called a bucket strategy, where we technically park assets based on the longevity and the risk, and we tactically draw them based on what's happening on market conditions.
So, are we in a volatile investment environment at the moment then, Pedro? And if so, how do you really try and balance some of this risk?
Yeah, well, unfortunately, especially after COVID, we are seeing that the investment markets are trading very differently, especially with technology advancements. So we are seeing quite a lot of investors, inclusive of our philosophy here, our investment philosophy, is that we try to hug index options, or that's where most investors are at the moment. So that tends to give us a little bit of concentration risk. And what does that mean? It means that it's really difficult at the moment to try and reach alpha or above return markets or market returns. So ideally, separating that type of risk or sequence risk, we really need to look at when to sell, what to sell, based on the actual market conditions. So look, we are in a very volatile environment, as you can see from anything that comes or gets fed into the market, any information, we can see it very quickly, as you would have seen probably 3-4 months ago. There was a bit of a small correction, but that's how quick things can change in current environments.
So at Marin Wealth, tell us a little bit about your client demographic and what else you're doing in this space.
Yeah, so look, we do tend to cater for high net wealth individuals here. And obviously we are Brisbane based, but we deal with basically Australia-wide clientele. Most of them are accumulators, but unfortunately, we are seeing what we call either orphan clients, clients that don't have an advisor or have never seen an advisor before. We are getting quite a bit of an inflow of these type of clients, where basically they do have quite a bit of wealth, but they've never actually engaged with anyone to manage that for them. So that in a nutshell is the demographics that we sit at the moment. So in that accumulation environment, we're probably sitting at the 40s and 50s, and they're now starting to think, hey, retirement is just around the corner, probably less than 10 years from now. And ideally trying to get their affairs sorted before any eventuality comes into their life.